Greetings, Dr. Jeffrey Scott. This is my weekend market update for September 22nd, 2024. For those who are new, my name is Jeffrey Scott. I am not a financial advisor. Actually, I'm a cancer doc, entrepreneur, and my email address is hgsidoc@gmail.com, and this is for education only, which we'll talk about in a second. It's good to be back home. I had an interesting 2 weeks. I was at a medical meeting in Barcelona, and what do you do when you're over there? Well, you decide to go to Central Asia, which was new for me. Went to see the F1 race where we sponsor a driver in Azerbaijan, which was fascinating. Modern city, super nice. And then we went to Uzbekistan, places that I had to look on the map, frankly, to see where they even were. But what a trip, got back, and I'm back. I title this, What Does the Fed Know That We Don't? Is it possible there's some bad news out there, which is why they cut 50? Well, we got the PCE complex and multiple Fed speakers on tap this week, so we'll get some insight into whether this rally continues with a new leg up to all-time highs and beyond, or do we have a pause or some correction around the corner? Again, Jeffrey Scott, hgsidoc@gmail.com. If you're new to my channel, hit the subscribe button, hit the alarm, and you'll find out when I post these. They're all different times depending on where I am. And I love remarks, even negative ones if they're constructive, because this is for you. I have nothing to sell you during this video. And if I can make it more useful, then please let me know how. And if you like it, that's cool too. All right. As I said, this is for education only. Anything I talk about should be taken in the spirit of education and not considered investment advice. I'm a doctor, not a broker. I'm independent. I've had some really nice people make tools for me. Rob Hoffman in Wealth Charts, Praveen in TradingView, and a new app, Van in TradeStation. And I appreciate it. I use their tools. Everything I use, I've paid for one way or the other. And trading involves risk, and you are solely responsible for any investment decisions you make. If you like this video, and especially if you're a wealth charts user and you want to see how I use wealth charts in 10 minutes a day or less to assess the market, check me out during the week at stocksanddocs.com. Spoiler alert, when I'm out of town, it's hard for me to do that one, so I don't always post them. But I'll be back starting on Monday morning. I always like to start with where the market was. You know, I don't have the NASDAQ composite, and that's because something is wrong in the HDSI feed. And obviously, like everybody else, they get their data from somewhere else. It showed a minus 1% when I ran it using that data updated today, same as it showed last week. The reality is that's wrong. So I left it out. You could see that all the major indices were in green, although not as much of a move as the prior week. And this was an interesting week, and we'll look as we go forward. But the Russell and the NYSE led on the week. At least the Russell was up 2.2. The Dow was up 1.4. The NYSE 1.3. The NASDAQ 100 equal weight was up 1.2. The cap weighted was 1.5. Mixed day on Friday. You look at the big winner on the week. Well, it is natural gas season, up 5.9. You'd expect Bitcoin to like the rate cuts, and it was up. And you could see even energy that's been laggard was up 4.4 in the week. And look at that, IBD 50, small cap growth, and ARKK were both up a lot on the week as well. So maybe we've got some rotation into those growth names besides the MAG 7 that I like to trade, being a high growth stock investor. Here is the sectors. You can see beginning of the year, everything's up double digits except for energy. Over 5 days, the big winner, perhaps in a rotation or rebound at least, is energy. Now, this is a Q Edge tool, gives you great insight into what the market is doing. It's one of my computer displays during the week. And what can you see here? That on Friday, 82% of the sectors were down, 75% of the industries down, and 73% of the stocks were down. It was not a great day in the market for the longs. If you look here, 70% of the stocks are above their midline and their Bollinger Bands. That's down from 80. It's still bullish. And if you look here at the buckets, we'll go into greater detail. But let's just say we went from a potentially overbought area to less overbought. If you look at the 1 day, it looks a lot different than the 5 day, the 10 day, and the 1 month. So the question is, will Friday just be some hangover from the Fed and the rally that we saw on Thursday, which did start to weaken near the close, or is it something more ominous? Time will tell. The market breadth tool is a Metastock tool, also by Cigar, who did the Q tools. If you have any questions about any of the tools I use, or you want referrals to any of the people that have the tools, just email me or send me a note. I'll give you the contact information. I love this tool. I love it because it accomplishes a lot, includes a lot of the things that I learned from Ian Woodward. This is a total view, so it's combining the NYSE and the NASDAQ. And first thing I look at is here to see if there's any color indicators, and there's not. So nothing, no signals occurred on Thursday or Friday. You could see that we've had a bunch of Hindenburg Omens on this combined composite indicator. We had two bullish accumulation days over here. And we're just off all-time highs. Are you bearish or bullish looking at this pattern? I have to be bullish, but I have to also recognize that these Hindenburgs concern me. If you break out the NASDAQ and the NYSE, you could see after a big gap up on Thursday, really not much happened on Friday, didn't reverse what we saw. The bad day was on Wednesday. You could see we opened, traded higher, and closed near the low of the session. But that got negated. I guess people digested the news from the Fed. So that looks okay. And if I look at the individual indices, one thing I didn't point out is this green line here is the 13-week or 3-month new high, new low. And whenever it gets up to this area here, I get concerned. And, the damage on Wednesday was enough to pull us out, but we're still close to that overbought area. You can see the NASDAQ looks a lot less overbought than the NYSE, which is still stuck in there. Looking here, the Dow has come off overbought. The Russell's a little bit off overbought. The NASDAQ 100 is extremely overbought, as is the S&P 1500 and the S&P 500. So I don't see any other major signals, but that concerns me a little bit that we're a little extended in the short term. Now, one thing I thought was interesting was the rates actually went up 2% on the left on the 10-year, 2.36% on the 30-year. And I scratched my head. Why would the rates go up when the Fed cut 50 basis points? And I guess it must be perhaps the market data came out, wasn't horrible. The risk of a recession might be less, and maybe that's a good thing that those rates actually did not plummet. The weekly timing model, this looks a little different than it does in wealth charts. My buddy Praveen has created an app for me, which I call my Market MRI Pro, and we have a static picture that will update, and you have at the top, you have the WMA in yellow, you have the Bongo, and this is a weekly chart on top, and then we added this thing here, which is the signal line. And I think it's great because you could see that the spider has been long for quite some time, since October, November. The Qs remain in a sell signal, even though price is above the WMA, we have to flip the Bongo. The diamonds well above the WMA with a weekly Bongo has been good, so in a buy signal. And interestingly, one of the laggards, the Russell, actually turned to a buy signal this week. So 3 out of 4 are a buy, and the Q is neutral with the price well above WMA. Hopefully this week it'll convert. So I feel a little bit better about the market on my timing model. Now, we had the normalization of the yield curve in the 10-2 year. Now, I want to look at these gray bars, and let's look at timing. Gray bar came in after sort of the yield curve reversal back to normal in the 2020 timeframe. It was several months after. In this period here, 8-9, you can see the duration of time before the gray bar. The gray bar represents recession. 2001, 2002, a delay. 1990s, delay. For the most part, there is a delay to getting a recession from when you get the reinversion or normalization of the yield curve. So it suggests, because every time it normalizes, you get a recession, it suggests that we have a recession, but it doesn't tell us how deep or when. If we look at the 10 minus 3 month, no, nothing going on there. If you look at the credit risk tightness, none. And if you look at the Fed District 3 General Activity Diffusion Index, as long as we're above minus 20, it's not giving me a signal. So I don't see anything that says that that recession is coming anytime soon. But yes, I'm in the camp that we will have a recession. And as I've said here before, my guess is after the inauguration. Now, breadth increased on the week. Stocks above the 200, stocks above the 40, and the magic in white here came down a little bit, which is the 21-21 13-week new high, new low. The fact that it came down makes me feel better, but the breadth is pretty impressive here. Not all-time highs, but recent highs. So I'm still nervous about the breadth being extended. The buckets shows you 71% above. This is on Edge Rater with the S&P 1500. Here's where we were on Thursday end of market. You could see over 20% of stocks in the S&P 1500 were hanging below, excuse me, above the Bollinger Bands. And if you think about the Bollinger Bands are designed to capture 90+% of the time of a stock's movement. That means most stocks are going to be within the Bollinger Bands. And when we start to see large numbers above or below, a signal's at hand. Now, typically we'll get to 30, 35 before we get a reversal. But we did break above 20 on Thursday before the market pulled back. Another sign of extension. Concerns, we talked about the Hindenburg Omens signals on the NASDAQ and on the NYSE, either all NYSE or NYSE common. I prefer the common. Notice the interesting thing here is we still have a lot of new highs, although on the NASDAQ new lows are creeping up, but not so much on the NYSE. So I think the fact that we had the Hindenburg concerns me. For those that don't know the Hindenburg Omen, some people do consider it an old wives' tale. It's the kind of thing that when you see it, it suggests that there is a chance that we're going to see a big market correction. Only 1 out of 4 times you get a confirmed Hindenburg, which is 2 signals within 30 days, do you get a significant pullback, but most of them you don't see the market go up. So something to be concerned about, but boy, look at how we peaked Thursday at 11.43 new highs, 52-week highs on the NASDAQ and 14 on the NYSE. So extended markets already starting to ease some of that, something to watch. Overall, another good week for the bulls. Remember, this is a performance of a group of stocks. These are stocks $2.50 and 250,000 shares and higher. It's looking at 5-day performance from Saturday to Saturday, but the 5 days in between. I throw out the tail because there's very few stocks. I throw out the head because there's very few stocks. And I look at what's in the middle, and it kind of looks like you had better performance on some of the underperformers, signs that we might be seeing some rotation. Again, the fact that FFTY, the IBD 50 ETF, which is small cap growth, which has been a laggard, actually is one of the leaders on the week. Down here, you can see pretty broad-based upside based upon regardless of earnings per share or relative strength, although stocks that were weak continue, the weakest relative strength did poorly. So a good week for the bulls. I put this in here because there's no green, and there's I run a lot of scans, and this is a scan that's looking at some major ETFs, and I'm looking daily at whether or not there's divergences. Why? Because if I see divergences, then it might want me to think about the underlying stocks. There are no bullish divergences on any of the ETFs listed here. But notice how many XLI had bearish CCI, RSI, and stochastics. Biotech, 2 of them. XLB, materials, 2 of them. Regional banks, bearish CCI. Insurance, bearish MACD, RSI, and stochastics. ITB, which I believe is home builders, bearish RSI and stochastics. The spider itself, bearish RSI. Discretionary, bearish RSI. And ARKK, transports, and home builders, bearish stochastics. So there is some concern in this market. Not only are we extended, but sometimes what do you get with extension? You get divergences. Know your news and your earnings. So on the left, you see a lot of arrowheads. I think by the time we get through Friday, we're going to really know what the Fed is thinking because we have a lot of Fed discussions, including Powell during this week. Powell gives some remarks here on Thursday. The big data points got to be the PCE complex. We've got some revisions of GDP. We got some homes, confidence, Case-Shiller, and some PMI data. So there's a fair amount of data this week, but I think those Fed heads and the PCE are the drivers. And we're beginning, either ending the last or about to begin the next set of earnings releases. Excuse me. And you could see we've got some big names here. We have not many, but we have KB Homes, might give us insight into the home building. We've got Micron, memory maker. CarMax, what's the status of used cars? I still don't understand why Carvana does so well. Maybe because it's a tech company and not a used car company. And then you've got Costco. And I'm just going to make a comment about Costco. And I'm going to bring up Costco in TradingView because it's got some of the data that I want. So let's just go here and type COST. The indicators I use, by the way, are the exact same. I've got them because of the folks I mentioned earlier have been made for me in multiple different programs. And I'm struggling with what I'm going to show you. And I think I've showed you this before. Based upon earnings, okay? Based upon earnings. And one of the nice things about TradingView is you can open this E and go to cost financials and you can look at earnings over time. And earnings look to me like they're peaking now and dropping on EPS and revenue. That's interesting, and Q4 is always strong for them. But the question I have is how do you justify a forward PE on Costco? I'm not a Costco hater. I'm a Costco lover. I love their gas prices. I love so much about this company. But how do you justify that valuation? PE backwards looking 55.83, maybe price to sales is how you justify it. But I look at this market and I see a lot of things that to me look crazily overvalued. And you see the move that Costco has had. That'll be an interesting one to see because I'll tell you right now, if it's not perfection, here's what perfection is, folks. It's beating earnings, beating revenue, and oh, by the way, not what's listed, but the whisper numbers. And it's then talking about forward-looking, raising guidance on revenue and sales. There are 4 places you can miss. And some of these things, like Costco, are priced for perfection. And I love Costco, the store. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. That's my comment about earnings. We all manage them the way we manage them. So a lot of comments here. Strong week, but not without some wild rides. Fed didn't disappoint. Economic data was mixed, so maybe there is a soft landing. There are fears of recession. When you look at YouTube, a lot of people talk about market top in the next week. That could happen. I don't think so, but could happen. I remain long, but consider risk to the downside. I maintained cash, took some profits into Thursday rally, and have no margin. One can make arguments supporting both the long and the short thesis from the bull. Fed pivot, rate cuts, economy still showing strength. Long time since we had rate cuts in the setting of a good economy. For the bears, what does the Fed know that caused the 50 basis point move? Was it really because they should have done it last time? We've had multiple Hindis that are near all-time highs. Many valuations seem high with stocks extended. And oh, by the way, I showed you we've got a number of divergences as well. We may get some clarity this week with the multiple Fed heads and the PCE complex of data. This is an old thing. I didn't mean to show it this time, but it's probably not wrong to show you that Fed rates are the dark, the market bottoms are the light blue, and we don't get bottoms until after the first cut. You don't have bottoms at tops. So just something I thought was interesting. All right, let's end this and let's go look at charts. As always, I'm going to spend most of my time inside wealth charts because of a number of reasons. It's probably the best full-featured program on the market, especially for people that, well, they want to make it easy and comes with just a wealth of education tools and speakers on a regular basis. It also has my tools in. It's got some great scanners. I use a lot of programs. Metastock is one that I'm hoping to get my tools into, working on that. Metastock is a great program, especially if you trade overseas. TradeStation is a trading platform that has a great scanner and radar screen, and Van has programmed my tools into TradeStation. TradingView, the scanner's better, but it's not good enough for me yet. Praveen has built a freestanding scanner to support TradingView users. It also has my tools in it. But probably the most full-featured of them all is wealth charts. So we'll start with wealth charts. This white line here represents the close on the last bar of the prior week. So you could see we had a very strong week closing well above that line. You could see that Monday we kind of were above and below that line, closing a little bit above. Tuesday, we gapped up on anticipation, positive Fed concerns, but came back and closed kind of where we opened, or below the open, but where we closed the prior session. Wednesday, we ran up into the Fed report and came back down, closed flat. And then we digested the information, or the markets digested the information Thursday night, and we had a big gap up Thursday, closing near the highs of the session. And then Friday, we gapped down, traded lower, and actually trended higher, but closed at the sort of the middle of that trending zone on Friday. So an interesting week, closing much higher than it opened with some volatility around that. Here's got mids, the Qs, and I look for clear-cut changes, but this looks like everything sort of behaved the same, so we don't need to go spend much time on that. If we look at the daily chart, is anything really broken down? So all-time highs were set on Thursday. All-time closing highs were set on Thursday. Friday we were down a bit. Nice, kind of a doji with a little bit more tail on the bottom. It's not a horrible looking pattern right here. Are we going to flag a little bit before we go higher? It's certainly possible. So the S&P spiders were down 0.5% after being up 1.7 on Thursday. When you look at the weekly chart on the S&P, you could see a super nice candle up 1.11%. So I can't say that that looks bearish. Can you? Let's look at what else we have here. Let's look at the Qs. Kind of like the spiders. Now the Qs are well off their all-time highs. All right, you've got this line here that I've written in the past, and we actually broke above it. And then we had a potential divergence line fired here because RSI has not taken out the highs. So that's a concern. Thursday was up 2.5%, and Friday was down 0.19. For the week, the Qs, nice week, up 1.49. Is that bearish looking? No. To me, it's not bearish looking. Remains to be seen where we're going to end up. But we're above this trend line and still could go higher. There's not a lot of resistance sitting above it. All right. Take a look at the diamonds. The diamonds beat off these diversion signals, set an all-time closing high on Thursday when it was up 1.25. Friday was down 0.2 and closed much higher than it opened. So on the surface, it's hard for me to be bearish when I look at the major indices. although things don't go up forever. When we look at the Russell, just reminds me that we are well off the all-time high, 10% or so, and we hit on Wednesday, we were up just a tad, but we traded higher during the session. Thursday was down, Thursday was up 2%, and Friday was down 1%. If we look at the weekly on the IWM, you could see another strong week. And you could kind of draw a trend line here and say it's breaking out. So it's hard for me to get real bearish based upon the indices. The VIX on the week traded down 1.39, considering it closed at 16.3. 1% is about 20 cents, not a big change. And if we look at the dollar on the daily, it's kind of just bouncing around here at recent lows. And on the weekly, the dollar was down 0.14%, although it closed higher than it opened. Similar to the 10-year, maybe some strength in the dollar here would be okay, telling us that the economy is not about to roll over. Looking at commodities, and I better connect to my futures and commodity vendor, turn that on, although it's now built in. So I got to change my layouts. Now built into wealth charts, more of the value proposition. I think it's like $6 a month. Gold, all-time highs, up 1.27%. Silver took out these tops, up 1.14%. Not at all-time highs, but looks great. Oil, struggling to get back. Boy, I wish we would have filled our strategic reserves when it was in the 60s, up to 73. About to have a bad cross with the 50 crossing below the 200. Natural gas, I don't talk about much about it because it's been dismal, but we're getting into natural gas season. So it was up 5% on Friday. And then we look at the 10-year, which, as I mentioned before, if we look at this on a weekly chart, we can see a small gain on the week, but really at recent lows. So nothing much going out on the 10-year. I already showed you the market signals, that 3 buys, 1 neutral, so long on my weekly timing model. Looking at the breadth to see if I see any signals. So the first one is the TLT versus the spiders. And what I'm looking for is a spike, and we don't see it. Why am I looking for a spike? Because during times of recession, we see a spike. Here was 2008 and 9. Here's 2020. There is no spike now. Credit tightness. This was a concern here. Was this telling us something was happening? Let's look at a longer time frame and maybe push it out to weekly. Don't really see much of a signal there. Okay. Up here is looking at equal weights S&P 500 versus the cap weighted. Equal weights are doing well. I think that's good for the market. This one here is equal weight Qs versus the Qs. That's kind of neutral. Both are doing poorly. And you can see after peaking here, the Qs versus the Russell starting to show some strength in the Russell. As a guy with a lot of small caps historically, small cap growth, I like that. If we look at the GMMA gummy charts, everything is above the moving averages, and we're starting to see the lines line up in the bullish formation. Still tells me to be long. If I look at the S&P sectors daily, let's let this load and see where the strength is in this market. Materials neutral, communications neutral, energy coming off of weak. Financials have come off with the highs, so kind of lose their star. Industrials are probably the strongest so far, so let's put drawing tools, shapes, objects, and let's give them a star so we can watch them during the week and see if they keep that star. Technology kind of in the middle of the range, as is staples, real estate. Utilities look good, and boy, were there a lot of utilities. When I looked at my 1,000 stocks this morning, that looked interesting. Let's give it a star. Discretionary has divergences, as we know, and these are all ratio charts of the S&P sectors versus the spiders. But things that are pointing to the north are where the strength is, so there's some strength in discretionaries. Healthcare came off the strength, and biotech, not doing so much. It's kind of neutral. So industrials here, discretionary, and utilities. All right. And then I go into the scanners. So let's start by taking a look at the heat map, and let's look at the S&P 500. And let's start looking at some of the Mag 7, 8 stocks and see if we have any thoughts. Tesla. Well, if you look at the weekly chart on the right, you can see Tesla had a deep pullback, is now making its way up, had a pullback here and is moving higher, kind of bullish looking. We broke out from this trend line here, had a launch indicator. So I think Tesla looks pretty good here. I think with this market at risk, I probably wouldn't be doing anything till it took out this high. But Tesla looks okay. Now I'll give you the bearish take. I mentioned in the beginning that I was in Uzbekistan. Yes, I had to look it up on the map too. It's one of these Central Asian former Soviet republics, sort of a liberal Muslim country where I felt right at home, even though I'm Jewish. Um, super nice people, super, super nice people. I saw so many never heard of before EVs from Chinese makers that I've never seen in my life, and they are cheap. And BYD, which I've heard about, I'm not sure I like it, um, which in the back says bring your own design. I don't know if I like those words. BYD is okay. They make some incredibly beautiful cars and SUVs. So Tesla's the king, and Tesla's much more than just cars, solar, etc., and Elon. But they're going to see competition someday, especially if Trump doesn't get elected with his big tariffs. So Tesla looks good. I'm kind of interested in some of those smaller Chinese. I'd like to buy one, frankly. Nvidia, Nvidia has got a ways to go to take out this trend line. Until it does, it's in a downtrend. Now we got the line up here, this line here. So technically we're kind of going to bounce between these and hopefully we'll see a continuation and break above. Um, would I buy it here? I own some, so I think it looks okay. But I think this trend line is going to be the issue. Apple had a great day on Thursday, reversed some of Friday after a gap up and a trade higher. I think Apple looks good. Meta, new highs. I mean, beautiful chart. Lilly, not Fab 7, the Mongiorno King. You know, it's dropped below the 17. It had a long-legged doji. It was still up zero point 0.7. Lilly's interesting here. Mongiorno is an amazing drug. The revenue is to die for because of it. I just think we're getting toppy. FedEx died. Remember what I said on earnings? They had a 24% miss on earnings. Woo. Let's look at the rest of the picture in trading view. Look at the volume, massive. All right, so it's not updated there yet. Let's see if it's updated here. 24, so you had a 24% earnings miss and a small revenue miss. That is really an ugly quarter for FedEx. SMCI has broken down, but is it giving us higher low? Is this a bargain down here? I mean, this was a former darling in the AI building out supercomputer space, big purchaser of NVIDIA chips. Notice how OBV and relative strength have turned up. Intel, now talk on the street about them potentially being acquired by Qualcomm. Um, I don't know if I would buy it on that rumor. Amazon, breaking out. Friday was up almost 1% on good volume. I like Amazon here. AMD bounced around this trend line for a while that goes back a long time. And now it's got to get above the 200. I wouldn't be buying it till it was above the 200. Constellation Energy. We saw this on a couple of Vistra, I think, is another one we'll look at eventually. But look at the big gap up on an energy play with a launch indicator, massive volume, relative strength in OBV. Is it extended? You know what? When it's coming out of a squeeze like this on the moving averages, I'd probably still look at that stock. Yes, it's extended, but maybe not as much as it seems. Microsoft, well off of its highs. You could kind of see some head and shoulder stuff going on in here. Um, it's lagging, not bad, but lagging. Netflix, leading. Not a great couple of days, but really just off its all-time highs. Avigo, Broadcom, sort of breaking out here. Good volume, breaking out. Relative strength at OBV look good, not extended. CrowdStrike, the one that took down companies across the country back here, it's recovered. Take out of the 200 here, this might be interesting. Now, one of the leaders in the marketplace, apparently a big winner in the AI from a support perspective. And you want to see a loser, look at Adobe. Why? Earnings, 2.65% missed. That's not much. Stock dropped big time. So, a mixed picture when you look at some of the Mag 7 and some of the other attractive stocks. Here's Costco. I mean, when is too high too high? It's only at 58% on the high-low jump, so it could certainly go much higher. It's had a massive run in the setting of slowing earnings. That's the only thing that bothers me. Love the store, love their gas prices, probably going to go much higher. It's just the valuation to me is a little bit challenging. If I look at Wealth Scanner, get an idea of what's leading in the market right now and how much broader base strength we have. So the first thing I see is we got things above 850, above 800. Yay! What do we have? We got consumer discretionary, XLY, one of our leaders. Communications, telemedicine, digital health, transports, that's nice to see. Telecom, preferred, bonds, genomics, bonds, 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 silver, construction, home construction, Russell growth. There you go. Russell 1000 growth. Um, Maybe that's kind of why 50 is starting to move. So we've got some interesting pattern here. Certainly some strength has come into the market. So now you're probably sitting, all right, I've looked at a bunch of stocks, looked at the indexes. How am I going to find what I want to buy this week? So I'm a top-down guy. And there are a number of ways to do the top-down analysis. But it starts with understanding what sectors, then what industry groups, and then what stocks. So let me show you my new app that we're putting together. So let's go into the JAS layout, and let me just do a quick refresh to make sure everything's up to date. And what the JAS list has, we looked at all the stocks in the marketplace and we put in a price and volume filter, and you can see here that's 3,274 stocks made our list. We then have the sectors that they're in, and we build the sectors on the ground up. So we can look at, and I use a thing I call JF, Jeffrey Force, to rank them, that on the sectors, remember what we talked about? Utilities, industrials. Now the way that we rank these, the cyclical, the discretionaries did not rank as high as they did in the when I looked at the ratio charts. But you can see broad-based strength starting with utilities. When I click on the utilities tab, I bring up all the utilities in our data set. I look at by relative volume, which ones had big volume moves, but I like to rank it by the JF. So ranking it by JF, what comes to the top is CEG, and you could see here that it had a pretty massive move. The high jumps at 100. You could see the volume. You can see 4 dots there. What's more interesting is that my EMS signal, the early signal, turned into a buy down here. Probably wouldn't have bought it there, but it did get kind of interesting right here where we actually had a breakout above the moving average. So has it gone too far? We each have our own taste. You could see here my dots, relative strength versus the spider, and OBV. VST was the second utility, Vistra Corp. Similar pattern, big breakout. You got momentum, you have volume, you have a gap. You'd already broken out, so you didn't get the broken out dot. You broke out back here. Both of these have gone a lot. GE Vernova, another nice looking chart, kind of reversal looking pattern there. And I could go down the list. So I have the ability of looking at all the utilities, or I could go over here, and these are the major industries. And we're still working on this tool. But renewable utilities, here's your CEG, your GEV, SMR, what is NuScale Power. A little bit more buyable. I don't know anything about it, but look at the volume that came in. The gap. You got volume, gap, breakout, momentum, what I call my CPR signal as well. So a number of reasons for SMR to look good. NEP, Next Era Energy Partners. So you can now look at them that way. So I love doing top down. So what I'll typically will do is I'll look at the top 3 and then look at the top couple in the group. So independent power, there's your VST. Another one that looked good is NRG Energy. And you could see breaking out, and you could draw a trend line there, not yet active in this product yet. So a number of nice looking utilities. Technology, again, I could look at the whole list ranked by JF. Now comes to the top, and now is one that might be hard for me to buy considering the high jumps at 100 and it's run away from me. I'd rather buy it on a pullback, and these things will pull back eventually. But CrowdStrike looked interesting. We looked at this before. I like for it to clear the 200, but that seems pretty imminent, and perhaps I might put some type of a buy above that. Monolithic power systems breaking out above the 50. So the top by JF is semiconductors. And so MPWR, KLAC is another one. This one below the 50, I'd probably pass. LRCX, well below the 50. So this has been a beaten down group. And so these are some that are leading the move up. Universal Display. And here's an AVGO that we talked about before that I like. So technology distributors, what is that? Aero electronics, not so exciting. Then computer hardware, and there's your SMCI leading the way. And this is one that, it's not a growth stock breaking out to new highs. It's trying to buy something cheap. Now let's just pull up TradingView because I like it from understanding the fundamentals. SMCI, Supermicro. So here's why it fell. Its next earnings date is October 29th. It fell because it had an earnings disappointment of 23%. Its forward-looking PE is 100.9, so it's still pretty high. And you could see it had some pretty big EPS changes. If we pull up on the earnings worksheet, and we look at where earnings are going. So 5.32, 6.4, 6.7, 6.8, 7.4. So they're still going up, but they're not going up in the 100 to 200% range. And perhaps that's part of the problem with a lot of the AI space. We're seeing still growth, but growing a little bit less fast. Arista Networks is one that I've always liked, a steady mover up. Probably could adjust this and narrow it down, but this thing's up at the high range. I'd rather buy it on pullbacks. So I love the top-down approach, and more to follow on my little app at some point. It'll work on multiple different devices. So discretionary communications are the ones that looked interesting. So let's talk about the CAT scanner, which is a add-on to wealth charts. So I could do bottoms up, and bottoms up I could take a large list. So my combo leaders list is something I put together every weekend. And I go through all kinds of sources, and I build a large number of different bullish or bearish lists. And then I combine all the stocks that were in those lists into a bearish leaders list and a bullish leaders list. The combo leaders list is a big list. It's about 1,400 stocks. And these are stocks that someone, whether it's me or someplace that I subscribe to, put them on their list of bullish stocks. So it turns out the one that comes up to the top actually is one of my favorite stocks of the weekend. So it is hanging up, so let me do the sort of the reset. Let's go to my scanners, rank it by dots, click on BWXT, and look at BWXT. All right, so are we in an uptrend? Absolutely. Look at the weekly. Have we pulled back from the highs? Absolutely. Is there a trend line breakthrough? Maybe. Let's check it out. So you got that one there. So we are right there. So this one looks very interesting to me. Massive volume, a gap, volume, breakout, momentum. The daily bongo has flipped to green. Um, PSAR reversal, not extended, and relative strength and OBV look good. So I might look to buy this if it took out this trend line. Again, looking to buy it is not a buy-sell recommendation for you. I don't know the size of your portfolio, how many positions, your risk tolerance, and your goals. This is education, but this is a stock that sort of fits my pattern of what I like. Notice my EMS signal fired several days ago. Nike comes up high on the list, and the reason will be because when we get the signals down here, and sometimes this happens to me on the weekend. I don't know if it's my internet access, which I doubt, or too much is running on my computer. And let's just bring this up, and let's go back into my stock scanners, rank them by the dots. So Nike, this is something that's broken down a lot. These may not come up for reasons I don't know. There you go. Decent volume, 200 over 10. This is in a downtrend. So yes, it's in a short-term uptrend, increased risk. I worry about what happens in 9% when it gets up to the 200. Will it fail again as it has? So I'd probably pass on that. Now, UUUU is one of several uranium plays that had a big move. Now, the one I'd be more interested in is CCJ, Cameco Corporation. And, like the last stock, it's got to get above the 200, which is just $1.40 above, 3% higher. But big volume, breakout, momentum, relative strength, and OBV look good, not extended. So I'll be watching CCJ. IRDM is something that I don't understand what they do, but I think these might be a satellite radio company. It's not really a big uptrend. Yes, the weekly bond goes green and the daily bond goes green, so it's trending up short term. But it had a EMS signal, a wealth signal, a launch indicator. Just got to clear that 200. But look at the volume the last two sessions. volume, breakouts, momentum, relative strength, OBV, and ignore the high jump. It's still below the 200. I don't care what it says. MASI is in sort of the construction supply industry, I believe. Now, again, is it an uptrend? Yeah, only a very short-term uptrend. Got to clear the 200. PEG is another one of these nice-looking utilities. Lower left, upper right, big volume, breakout momentum, relative strength and OBV look good, and problem is it's getting extended. Because of the gentle rise here, I would be okay with that. Vistra is one that I already showed you from the app. Vistra had a big gap up on major volume, has momentum, broke out several sessions, two launch indicators in a row, relative strength OBV, not too extended. I like that one a lot. WMB is one of a number of MLPs. Um, they are interest bearing. I guess with rates falling, it's good for them because they borrow. Big uptrend, pullback, and a nice move on Friday with volume breakout momentum out of a squeeze, not extended. Like to see the relative strength improve. OBV looks good. AEM is the first on the list of these gold and silver names. Gold at all-time highs, GDX perhaps lagging a bit. And this one is giving you a sideways move here, kind of a cup and a handle. Is this one ready to break out? Alamos Gold, AGI, is another gold play. A little bit of a pullback here. If gold goes higher, I like that. Now this one surprised me. We're now down to 2 dots. So we're now at a point where conviction is going to be a little bit lower. BTU is a coal energy play and one that's been in a downtrend for a while. But BTU broke and closed above the 200 in the market on massive volume. That might be something to watch as well. Going down the list, does anything else jump up? Newmont was another one of the gold vendors or providers that I liked a lot. I don't. Nutanix seems to me to be maybe more controversial, but I might be thinking of something else. But big gap up, sort of a flag, and now a breakout above the 17 on volume on Friday with good relative strength and OBV, not extended. So Nutanix looked interesting. OKE is another one of the MLPs. This one's had a big move. Toast. Whenever I go out to eat, I marvel at how everybody uses their little toast things for payment processing at your table. I kind of like it. That way your credit card doesn't go to you don't know where it's going. Now the thing with Toast is somewhere here is where it likes to reverse. A break above that line might be interesting. ACIW, uptrend, pullback, getting ready to break out to new highs. I like that one as well. So boy, there are a lot of interesting stocks to the long side. Now let's go to my watch list. I know this is getting long and I'm getting tired, and in 11 minutes my last year great Michigan football team, this year we need a quarterback, starts to play USC, which is going to be an interesting game. I should be more optimistic, but I'm not. All right, so I found a number of stocks that I thought were intriguing. You've seen a lot of them already in this session, but let's just talk about a few. Adama Biologics, been a huge mover off of $7. It's got great earnings per share growth. Just came out of a squeeze at recent highs. This is more of a speculative play. This is Astera Labs. This is a young AI company, a recent IPO. Fell for quite some time, sort of put in a double bottom here, is now taken out the 50. There's no moving averages above it. Obviously, there's a lot of people that might sell it when it gets there. Big volume, relative strength and OBV look good. Alarm, one of my favorite companies, especially after my house got broken in with video cameras, and it's because of alarm.com that I got notified when they broke through the door, and by turning on my other company, Control 4, lights, TVs, stereos, I scared the perps out. But they were kind enough to leave some blood along the way, and they got arrested. And Lo and behold, not to make a political statement, they were illegal aliens from Chile living in Miami who were picked up in a raid by ICE, which is when we got our CODIS hit. And apparently there are roving games coming up from Miami-Dade up into Broward and Palm Beach counties. Go figure that one. ANF, um, been in a downtrend, so I'm kind of not really interested in buying it here. But if it moves up above this 50, it might be interesting. App, one of my holdings, which just had a great move, probably too extended to chase it up here. We looked at BWXT already. There's your CCJ. Calyx, one that I kept waiting for it to break out, and it finally broke out on Thursday on good volume. I mentioned it's the season of natural gas. I don't like buying things below the 200. This is Chesapeake, a natural gas play. Day one biopharma, don't know anything about them from a fundamental perspective, but in a gradual uptrend, took out the 200 on good volume. As I said, there were a lot of stocks. KKR, the whole asset management complex, I'm not sure I'd be buying this here. It's obviously very extended, but what a great move on a dividend payer. L3 Harris, number of the defensive plays look interesting. This has had a pretty big belt hold day on the 50 and 17 on good volume. Others in that I liked in that space, is it Lockheed Martin, which is the next one. Big uptrend, digestion, looks like it's ready to go. Look at the volume that came into it on Friday. You want something cheap that looks interesting? How about Lucy Innovative Eyewear? Breakout multiple launch indicators. Big volume day here. I don't think this company makes money. I'd do some research and check out the news. What else looked good? Powell has been good for a while, breaking out or testing old highs. Have to clear this area for me to chase it. But again, this is a list of stocks that I'm watching. Doesn't mean I'm buying them. But it did break out there on Friday. Like that a lot. Quanta Services, another one. Again, industrial space breaking out here. Uptrend, pullback, new breakout. And I think that's, oh, and I talk about this guy a lot, Viking Therapeutics. I really put this in the class of potential takeover. They have some GLP-1s that will compete with the Lilly and the Novo Nordisk products. Um, I think this thing's going to take out these highs at some point. Had a nice move on Friday on a tough day on good volume. And then the other one, which is not on my watch list because it's just gotten way too expensive that I have a position, is Summit Therapeutics. And it's pulled back a lot. I really thought that this thing was going to get taken out already with the data it had, but it's Chinese data. So I've got a small position. I took some profits. I got in at a much lower price. But these things, if I look at Viking, maybe it can give us an expectation of what's going to happen is that it'll come back and then slowly move higher. And we talked about Vistra as one that I find interesting on the energy front, or utility front rather. So this is an hour of top-down investing. I gave my perspective on the overall market. I then identified for you which sectors were working. I showed you a little bit in my top-down app, Market MRI Pro, how I can digest down through the industry groups and sectors. And then I use the combo scanner in wealth charts to go sort of a bottoms up. Now, you could also do top down by just finding those utilities, for example, which is one of my leading groups. And we'll close with a couple minutes here. Utilities, the leaders, PEG, which we talked about, Vistra, which we talked about, Exelon, which I didn't mention, big pullback here to break out, and then NEP, which we talked about. NextEra Energy Partners. We didn't talk about this one. We talked about a different NextEra, I believe. That might be a pipeline. We could look at industrials. And again, I'm looking for stocks that are giving me signals right now. Katos is another defense play, but we did look at Lockheed Martin and we looked at LHX, CCX. Is it going to work this time, a break above the 200? It might. It's worth watching. I wouldn't be buying it just yet, but I connect those lines and say, hey, we just broke out of that trend line. So something to watch on massive volume with relative strength and OBV. FTAI just has just been the king. But is it buyable up here? It's a little extended. And then the other was discretionary. So let's look at discretionary. Nike. I looked at it already. I'm concerned it's in a downtrend. It's failed here at the 200. Here, here. Will it make it above the 200? Qpaying breaking out to new highs. That one looks kind of interesting as well. So I've given you a lot of ideas, and I hope you found this to be useful. I always appreciate the comments. Sorry it went so long, but in 2.5 minutes, my football game starts, so I'm going to finish with 2 minutes to spare. Have a great rest of your weekend, and look for something on Stocks and Docs on Monday. Thank you.